Hey guys, hope you're doing well. This is a little bit unexpected video, but I had crazy idea to try something new. So we'll see how this goes. If the video or like if you guys gotta be interested, if I see the video goes well, like and subscribe. Actually, like just liking the video is pretty much good indication for me to like keep it going. We can run this series a little longer. So what this series is gonna be about is I'm just gonna be reviewing my point of view on the current market and how I potentially see some trades in the future. So some forecast, if you will. And because I've seen people actually being still interested, like Forex and the crypto, even though I trading 3 different markets, we gonna be covering these two probably for time being, EURUSD and the BTC. So the way I like to trade is basically 2 different type of frameworks. So maybe I'm just gonna be repeating myself over and over, but since this video is kind of like introduction, let me repeat it just once. I like to trade 2 different time frames. I like to trade on a high time frame for the days where I either don't feel really well focused on a low time frame. Sometimes the market's gonna be really shitty, like you can see here. And then the second one is basically I like to trade some kind of session rotation. So what you're seeing, like all these like crazy rainbow pictures, all the colors, this is the way I like to trade the London Open. We can talk about it later on. I was actually thinking to covering the entire basically week of price action, but I am pretty sure, and I know people too well, that if I'm gonna be covering every single movement on the basically on the market, people will still not gonna change their mindset when it comes to the trade frequency and stuff. So what I'm gonna do instead is I'm just gonna talk about the most or the highest probability trading setups that I like based on my understanding. I'm basically seeing in the market, and it's basically mechanical based, like or the rule based system. So if you're gonna learn like how to decipher my, I don't know, discretionary goal, like my yap fast, then maybe you can find also some great trades. Over the course of years, I shifted from trading too often to basically trading less but put a decent size on a trade. So if I happen to see basically a week where I can take 1-2 really good fucking trades, that's plenty enough for me. Of course, like there's gonna be some, well, I obviously trade more than that, but I am having the mindset that I just need to catch 1-2% ish, you know, on a particular week, and then I'm more than happy. If I underperform, well, it's pretty much fine, because like not every time is the sunshine and the rainbow, right? But also if I do better, well, it's gonna be just a pleasant surprise, but I'm not too much attached to I have to trade every single fucking day. Maybe you're wondering what are these like buys and the sell signals. I actually posted 2 videos back, this indicator, which you can claim, so check it out. But what I found really useful is I am using, especially on a EURUSD. On a EURUSD, I like to use basically white and yellow color for bullish and the bearish trend. And more often than not, that's actually kind of good enough for me to just riding the trend. So as you can see, like there is a switch between from sell to buy, and then we continue to the upside. Obviously, as you can see here, there's some selling pressure, or not selling pressure, basically the sell signal, but there is no, if you're gonna blindly focusing on, hey, there is a white candle, just go balls deep long. There is a short signal, just like short it to the moon, or, to the zero. Well, you're probably not gonna be profitable, right? But if you're using the right context, this tool is actually kind of amazing. So I was actually holding some positions after this drop, and I kind of get stopped out pretty much break even. I was aiming for the highs. So I kind of knew that maybe the Monday or Tuesday is going to be a little bit shitty price action. Well, the Monday obviously was. So we actually shifting to the downside, which after failing and like no follow through to the upside, it does make sense, right? So I wanted to obviously take a trade. Maybe I can have a look on my, intraday chart, but like from the 1 hour perspective, I'm only seeing two high probability trading setups in my opinion, and that's basically this setup right here and right here, which I believe this one was taken. Yeah, that's pretty much this one as well. So what's the logic behind these trades? It's rather simple. So as we breaking this low, I'm seeing such a basically a strong candle push to the downside. So I wanted to basically see how we're gonna, because this is basically the New York Open, right? So on the New York, we having some reversal to the upside to take out the London, and then the very next day we having either gonna having some follow through, right? So we're gonna have this kind of push to the upside, or we're gonna push to the downside. So one of the things that I like to use is I actually don't trade without my SR zones. So you can think of it as some sort of framework. So what you're seeing here, this is basically calculated average daily highs and lows. And these zones representing some sort of probability where the price is likely to go. So if I see shift to the downside right here, basically touching the average daily low, I will definitely go, on a lower time frame and trying to look for some type of setup right here. So as you can see, a really nice V shape. So with some time confluence, this can be a rather useful tool, but I don't want to go too much detail about it because probably not going to be as helpful. But just to let you know, sometimes why I don't basically enter the short and continue to the downside is because I'm looking at these basically extensions, and I'm using the confluence with the tool, because as you can see, most of the time the price usually ranges basically between the average daily highs and the lows. And if you use this tool correctly, you can actually avoid plenty trades, or like plenty losing trades rather. So the logic behind it here is pretty much simple. So we got the previous daily low, right? This is previous daily high, and usually you will see run, especially on a EURUSD, you will usually see just run on one particular high or the low. And because we didn't have any follow through on the London, on the New York session, we got basically this sweep right here. With this sweep, what we also have, we having this shift to the downside that we basically break all these candles. So that's literally all I need to take the shorts. And either stop loss is usually where is the level of that particular sweep, or you can use the wick. And because usually targeting the previous low, it's it's nice to have, or it's nice to do so if it's low risk reward ratio. I will either look to the left and trying to extend it to maybe to the level where there's gonna be likely some lot of volume. So this could be a pretty decent level, 1.5, I can take it. Or again, I can go and basically check out the tools and use the tools if I want to. So this is pretty much the most high probability trade of this week. And the second was pretty much this one right here. So a little bit similar setup and really clean one. We can also use well, I'm not gonna go into detail anymore. This was probably even better setup, because what I've seen here is we having really sharp move to the downside. we also breaking the law. So if you're trading the structure, that's kind of nice indication to, or nice confluence to have. I don't trade the structure, just in case you're wondering, but because I'm having the previous daily high, previous daily low, and I know that we will usually take just one side of the highs or the lows. Well, this low is really likely because there is no clean manipulation. You can basically see no really insightful wick to the downside, and as you following the price, you got triple or maybe or quadruple. Well, it's not as clean, but you get a point, right? So we got multiple wicks to the upside, followed by really strong bearish candle. So this is literally no-brainer setup right here, and yeah, that's pretty much it for a higher time frame. As you can see, it also perfectly aligning with average daily low and some zones. So that's pretty much what I consider myself to high probability trades. You could also argue that this could be also a decent trade, decent buy, but how you gonna position, how you gonna place your stop loss? Well, I would actually use basically the ATR value and trying to find the sweet spot based on this tool if I decide to take this long. And this would be also really valid, right? Because we're having this like strong bearish and bullish candle to the upside. So, but considering that we having this downtrend, we having all the confluences showing me the downside trend, this is pretty much all I need. And if you look at the basically RR, that's 3 or some, well, let's say depending on the, your stop loss and you're taking profits, but let's say both are 1.5. This is basically a 3 hour for the week. And if you're trading the high time frame with let's say 1% per trade, 3% per week, hey, I can take it for little to no effort. That's kind of no-brainer. So that's pretty much how I would consider, or like what I would consider high probability trades when it comes to the 1 hour time frame. And if I have the a little bit more time, I can go and scalp a little bit more. So I don't think, well, maybe this could be actually a kind of nice example, or this one. Well, maybe we can go to lower time frame with this. So basically, I like to trade the New York Open, not New York Open, New York Open. I like to trade New York Open on the futures, but on the London, I only trade the Forex, so EURUSD. So usually I like to avoid, basically my time filter is actually by 15 minutes, so I have to update it. I don't usually take first 5-10 minutes signals, because it's usually, if I don't see a clean basically results, I don't usually take it. But what I like to take is I like to take the previous Asia highs and the lows depending on the direction. So basically, if I trade, this is type of setup that I like to take, and based on some data, I have these green zones that is 70-ish% probability that we're gonna go to this level at some point. So this is basically a 1.8, 1.5 scalp right here. And then again, because we haven't take the basically previous low right here, this could be also really nice target. And if I see basically the signal right here, this is my let's say a little bit riskier setup. I can go and, well, that's not this one is short. I can take some sell setups right here, and if I see another momentum, I can basically add to it, and that's pretty much it. So again, like I said, if I would go to all the details here, I can see the video is already 15 minutes, so let's not go too much detail right here, and let's just having a look on the BTC. On the BTC actually being really clean when it comes to this like star step in case to the downside. So again, if I would be focusing, filtering the trades based on the trend or based on the indicator, well, always sell all week long except the basically Friday. But also, if we look in just pure price action, it does make sense as well, right? So we having some sweep. That's how I always like to trade. I like to see some sweep with volume candle, which is right here. Maybe if I will basically disable this and I will place my signals, you're gonna see that we having these volume candles. So there is also the volume candle overall. I just don't need to see it like every single time, right? But you get a point. If you're seeing this is indication of really strong price action, some strong rejection. So I'm seeing one rejection right here, sweep of the highs, another rejection coming back here, establishing some form of range, going high, another rejection, and this push basically breaking the structure, disrespecting this entire basically left consolidation and basically flipping from bullish to bearish. This is also really good sign to basically go for a short. And how I would be approaching this one, it's a little bit tricky because the picture perfect like snipe entry is literally it's mostly like a late New York session, but because like currently I'm in the Europe, this is basically the time that I have no freaking clue or no interest to even look at the charts. So what I usually like to do in this type of case is I like to just place the limit on some particular low, set a stop loss, because this is a really large move, set a stop loss about the around the body candle, and usually go for something like 1.5 ish. So this is the case. If I happen to wake up the very next day and I see I'm still in a trade, then I will remove my basically taking profit. So this is basically, you can think of this level as taking profit for overnight session. So just in case there's gonna be some crazy ass volatility, they would literally like sweep the lows and then shift to the upside. That's kind of basically my like precaution. But if I happen to see that we actually pushing price to the downside, I see this really nice wick that happened like later on, then I usually like to basically cancel the taking profit and I will follow the trade alongside with my SR zones, which as you can see here, I'm not shocked that we actually having some reactions right here, because if we will go, there's gonna be some consolidation around this one. This one is also showing some rejection, another rejection, kind of rejection, there's some weak rejection. I mean, you got a point, right? So there is this is basically some significant level. So I like to looking at the candle closure, and if I see really aggressive candle to the downside, then I usually place the trade or the taking profit around the lows, because either what I'm gonna do or what I'm gonna have, we're gonna melt to the downside even more and I might gonna be tilted, or the second we will sweep and then we will go and probably stop me out break even before we before we push lower. So this is kind of like my kind of precaution to avoid some trades. So this was pretty much really clean, no brainer. You don't need to do anything or like any really heavy technical analysis. Is just following the trend and really simple, ABC 1 2 3 type of price action. And later on, basically on a Wednesday we got similar setup. we are riding the trend to the downside, we having one sweep. This could be the entry depending if you waking up at 5 a.m. Well, I don't, so I would miss this trade, but now we having this wick to the downside with another rejection, and this is also like based on the indicator right here, a sell setup. So yeah, this itself is also kind of no-brainer. I don't know why it's happening this to me. And again, it depends how I would be positioned. I would probably trim the stop loss according to my ATR value, either gonna be like 1.5 or 2 times the risk, and then I would go for something like 1.5. So again, as you can see, we push price here, we swept the lows right here, and then we literally shift to the upside. So these two trades are in a way very similar to the EURUSD, and as you can see, we pretty much touch upon 1 hour time frame, and we got 4 trades in a week, resulting with, let's say this is 3, and you know what, let's say that this is gonna be also like 1.5 on average. So basically you are averaging this week by 6%, or basically 6R on the week, which in my opinion is amazing. And you don't need to like trade every single fucking day. I mean, obviously you can watch the chart, right? But this is plenty enough in my opinion, and this is much more scalable and much more consistent. So yeah, maybe looking at the forecast, I don't have much expectations for the upcoming week, except one thing only. Well, it depends how we gonna be reacting of this weekly level right here. If we're gonna have this rejection and pushing price to the upside, well, it can happen. But also assuming we having this like really significant wick, I am a little bit more inclined that we will take the previous weekly low right here, and then we'll see what basically gonna happen. Also, if I see the daily, on a daily, we basically having this kind of like a steep trend to the downside, then we shift, boom, now we having this and kind of like an inside day on a Friday. So I'm expecting following days to having some little bit volatility, especially because we having the intraday candle. But if I go to, let's say, 4-hour time frame, on a 4-hour time frame, I'm a little bit more hesitant. I'm a little bit more inclined to take this low. But what can happen even prior to the London session? We can have some really like strong 4-hour candle closure that would literally disregard everything what I just said. So I don't like to project as much in the future. But if I happen to see some really nice rejection, this would be also really picture perfect rejection of this level. So if we would wick down here and having some follow through, that would be beautiful short. But for that, we gotta wait. So hope you find this insightful, and maybe let me know if you want to have this type of content in the future. So yeah, take care.